Right. Let's move along, talk about the flip side of things today. The stay-at-home trade is getting hammered. Peloton is obviously the biggest loser, down more than 30%. They also just slashed their full-year sales forecast last night by $1 billion amid slowing demand. But still, Zoom, DocuSign, and Chewy, all darlings of the stay-at-home boom, are also down big today as well. Zoom by more than 7%. Gina, I'll start with you this time. Would you be picking up any of these names, given the re-rating to the downside we've seen there?
So it's interesting, Zoom obviously was just a darling during the pandemic, and so pricing was working against it. Peloton was just going to be a problem because you see a lot of churn in that space. So I've been calling for that downturn in a while. But you look at something like Chewy. Chewy, while it was a stay-at-home play, you're still going to feed your pets even after you go back to work. So I'm not sure that one actually deserves the pummeling that it's getting.
Which is down almost 6% today, Bob. And it's interesting to contrast that with names like Etsy, which were also stay-at-home beneficiaries but continue to do well.
Yeah, this is an old story. Most of the pure play, or the stuff that's largely related to stay-at-home, has been sideways for many months. Zoom is near a 52-week low, but that hasn't just happened. That's been heading in that direction for a long time. Other stuff I don't agree with. DocuSign, that's not a stay-at-home play. That's a tech play. My wife's a real estate agent. They've all moved to DocuSign and using that. That's nothing to do with stay-at-home. So DocuSign, I think, is going to be fine, for example. DoorDash is going to be fine. People are still going to be ordering out and bringing stuff, having stuff delivered to their homes. So there are a few. Peloton and Zoom strike me as definitely a bit vulnerable. For sure, Peloton, as you saw today, but other stuff that are more technology-oriented are going to be fine.
Tim, would you go against the grain at all here and pick up a name like Zoom?
I might go against the grain a little bit here. I think if you look at the kind of United Communications as a service and where Microsoft seems to be the one that's destroying everybody and that teams are kind of rolling through. But I just think that the enterprise market is so strong. I think Zoom has been, too much. And I do think that the valuation, not where you're getting too excited here. But this isn't just a stay-at-home story. And I do think this is a platform that continues to grow. And I do believe there's plenty of enterprise that they are able to compete with Microsoft. On Peloton, there are problems with that result that were not just suddenly they're trying to carve out a new demographic and there's been price cuts that this wasn't new to that result. But when they talk about recalibrating their fiscal outlook, I don't even know what the term recalibrate means in the context of an earnings report. It doesn't sound good to me.
It's a cycling term.
And I'm happy to be back at the gym. I'm happy to, if it's not obvious, I'm happy to be back at the gym.